This may be a really unique week for the stock market. Might be a bad thing, maybe not. I'm going to show you in the stock market charts what's about to possibly happen in terms of probability, what'll be more likely to happen. It's not looking great, but we'll get into it in this video, all the main indexes, and also the technology reports come along really well, very well. We had a big breakthrough last night. We're talking about computer learning, artificial intelligence, 3D printing, quantum computing, everything where there's stocks involved in the space for less than $5 per share each. It's a lot of work. I'm really plowing through it. It's coming along great. That'll be released to all the subscribers of the peterleeds.com newsletter. The stock markets are going to be closed on Monday out of respect for former President Jimmy Carter. That's also the day that Donald Trump gets inaugurated, the time when Donald Trump steps into his role. And a lot of what he's talking about doing on day one of the things was the tariffs. And this is also what I'm explaining, is that there's going to be a lot of tariffs that will then have counter tariffs. It's going to affect both sides, and this is a trade war. This is how it goes. We've had plenty of trade wars over the years, but the point is not about the tariffs specifically that matters right now, I think. The point is the fact that there will be possibly tariffs, possibly less than expected, maybe no tariffs. Nobody knows, but whatever happens, there will be uncertainty and commotion. And in uncertainty and commotion, there's always opportunities. Lots of good opportunities when there's everybody else getting a little bit freaked out and running around with their heads chopped off. So after this long weekend, I'll show you in these charts that there's a probability that we're more likely to decline in price than increase in price for the indexes. Let's get into it. And don't forget to subscribe to the Peter Leeds newsletter so you can get the big technology report that's coming out relatively soon, probably a week earlier than I told you guys, because it's going along so well now. And here's a one-year chart of the Nasdaq, but we're going to zoom in. I'm going to show you something. There's a 2-month chart, and you'll notice that it topped out here, bounced off this resistance level, a lower high, followed by a lower high, followed by a lower high. That's a downtrend, my friends. Now, what I want to show you mostly, though, after this outside bearish engulfing candle, that was Thursday, and then Friday, the gap up to a doji pattern. That represents indecision among investors. What this chart candle is telling you, shares opened here, they dropped down to there during the day and up to there during the day, but by the end of the day, they closed below where they opened. They closed right there. This implies that the more likely direction from here is actually a declining trend or a downtrend. And if you'll remember my recent video about the economic pivot, I was talking about exactly this. The Nasdaq is having trouble getting back above 20,000, and it continually tests that level. And if it continues to test the level and not break through, that's a negative sign. But here's a 2-month chart of the S&P 500 index. And if you look at this, gap up from Thursday to Friday, shares closed here Thursday, and then Friday they gapped up all the way to there to an indecision signal. That's a doji pattern. Some investors bought it all the way up to here, some investors sold it all the way down to there, and it opened about where it closed. After a gap up, that's an even stronger doji. That implies a change in the recent trend of the shares, which will go from up to down. And I believe it'll continually keep testing to try to break higher, and it'll keep bouncing off the new lowering resistance level. And this is all about probabilities. It's not about what will happen. It's about what will probably happen, which is sometimes all you need to know. You just got to be right most of the time. And here's a chart of the Russell 2000, and this is also showing you some indicators implying that the shares are getting tired, especially after the gap up. This 3-day trading pattern is a very bullish indicator, and then a gap to there, but I believe that this may be a resistance level now. And we're going to see as we get closer to it, indecision among investors 2 days in a row. There's not a lot of commitment among the traders to drive the Russell 2000 index any higher than where it's at about right now. There's a lot of indecision in the markets too, and a lot of things are priced for perfection because of the Trump bump. Now everything's about to play out. We'll see how crazy it gets, how much commotion there is. But just know that in this situation, what I'm seeing is that the probability suggests that shares of most of these major indexes will not go a lot higher, and that they're more likely to come down in the near term, next week or two. And they say as goes January, so goes the rest of the year for the stock markets. But so far it's up in the air still, what we're going to see. I don't see a lot of bullish momentum from this point, but also there's so much going on, advancements in technologies. So this is why you have to get into what I say is going to be a stock picker's market for sure from this point going forward, until everyone gets a better idea of where the economy is going to go. And spoiler alert, it's going to go exactly where I told you it was going to go in the recent video I did about the big economic pivot. That's exactly how it's going to play out.